All right, welcome people. This is part two of the live now. Without wasting any time, we're gonna get cracking on. So I won't waste any time. All right, I think to be fair, the market has been annoying, if I could put it in that way. I think the price has been really doing some funny things, but it's fine anyway. Recovery. Now I've taken a couple of losses today, but it can be recovered. So it just have to be the case, right? We're just gonna have to recover it. So I'm gonna start off with the dollar index because that's my main focus for me personally right now. So right now, yesterday was a perfect react. Well, from Monday now, what we had here was a perfect reaction. We had the situation where the price came to this. Some would call it FVG. I call it a validation point or a VP. On the daily, the price came back here. We had the price reacting, wicking beneath the high, but the body not closing. The next day, which was yesterday, we had the sell. And that was a very good sell-off. And you can see that with this sell, we've taken out two lows at least, and the price closed beneath the open of this candle here. So strongly bearish. Now, the reflection on Forex pairs is not exactly the same, and it has been pretty crazy. I'll show you where my trades were and what I was in and what happened to me. All right. So if I start off, now, first things first, before I move on, I believe the dollar index is still going to push short, and most likely when Jerome Powell testifies, the market is going to magically pick up a good direction again on the bearish side, most likely, and continue going short. Now, of course, it has been if you've been stopped out today, trust me, there's been a lot of spikes and price turn into the same area 6 or 7, in my case, like 9 times. Things that are just not the norm, but pretty annoying anyway, right? What I'll do, I'm going to clear one chart here. Just clear it out. Clear out this chart completely. Yep. Close that. And let's just have a look from the start. So again, my targets here, I still believe that the dollar index is going to be extremely bullish very soon. All right, my targets for the next kind of sell-off was over here, right? The price is broken beneath this zone. Now, I showed you that secret area on the 15-minute, which was a liquidity gap at 103, somewhere in this range right here. When the price gave this sell-off, there's a gap here in this range that wasn't filled out, somewhere within this range. Now, if I need to find it, I'll find it in a moment. But again, so far we have what we need. We've got this reaction here with the stop on, strong bearish sign here. But now, so far, let's just go on to the H4. Now, on the H4, what the market's actually done here is it's actually taken the weekly low, which when the price does that, that's a good trigger to actually produce a reversal, in this case, bullish. So maybe that is what is causing the prices of pairs to kind of range a bit and then pull back and then just do things that we don't really want, right? Now, how far the price is going to pull up, it depends. Right now, if I go on this H4 time frame here, we have a lower time frame, or in perspective to the others, the price has just filled out a validation point on FVG, and we have another one here this is on the H4. On the D1, we don't really, I would say really have that. There is a little bit of a gap here between, prices offered on these sides here. There's a tiny gap here that's been yet to be filled out. And above that, there is a supply zone. So my kind of picture here is that probably what the dollar index is going to do. I'm going to take this here, go for blue. Most likely what the dollar index is going to do is probably get back into this supply zone. Now, if I take this range from the top to the bottom, I can guarantee that this is most likely somewhere around equilibrium. So let's have a look. All right, there you go. So right here, if we keep an eye on this supply zone, equilibrium is where the prices hit the first time. Most likely we should have at least a wick into this area here, and then maybe a body close on equilibrium, which is good enough. And then the price should start selling off again. Now, the market has been doing, of course, shady stuff before the news comes out, and not every Forex pair is operating the same the same correlation right now. I give an example. So pound USD right now, you can see that it gave a very huge spike. I'll show you here. Now, pound USD can be a great pair, but it's not one of my personal favorites. So we've got one high here, another high here. All right, and then we have another high all the way up here. So the pound USD news, which happened at 12 UK time, took the advantage to take all three highs in that news spike, right? Before pulling back down again. And it was a pretty fast move. So for you to get in, you would have had to be really on the M5, and then you could have locked in maybe some supply liquidity over here for a short. But then your stop loss would be above this high or above the highest high within this range, so about 6 pips maybe. All right. If you go to the minute time frame, maybe you get a little bit more. So I'll just zoom out a little bit here. If you go to the minute time frame, then you have a little bit more of a better perspective as to what's going on. So really, you could have put your stop loss above this body here and, gone for it. So that was a reaction we had in that moment. And that's for one reason only. Above these highs will be buy stops, definitely, and also stop losses too. So the market went for that liquidity above there so that they can drive the prices lower, because now all of the buys that the market came into, the market, I would say market participants placed, the days before prior, all of these swing high points here have been taken out. So that means that pound USD actually should be going for a short. All right. Now, that's its own fundamentals at play. I don't believe that the US dollar is that strong yet to be able to push the price short. I think the price is going short because of the pound's news. Now, with the pound, if you didn't see the news, what we actually had was pretty interesting. We had a surprise rate hike. So instead of the rates going from 4.50 to I would say 4.75, what we actually have is the price has gone from 4.5 to 5%. All right. So pretty crazy stuff, right? Okay. So now that the price has done all of this movement, I do think that pound USD is probably going to go short and look for the next area of demand. We have a liquidity void over here to the left. And we also have another potential area, which is on the H1, it's this area right here, which is where price went into the first time. But because the price has taken quite a few highs, there should be some liquidity behind the price to go short, maybe to the next demand zone, maybe, before it starts to go long again. But we'll see. All right, at the moment, I'm still looking at the price and taking it with a pinch of salt. Okay. Now, looking at it though, you can see over here that the market never makes mistakes when it gets to where it needs to. Between the close of this candle and the open of this one was a small gap that the price came up to fill here, which was a good reason for the price to pull back short. Now, if I zoom out to the weekly here, we've had a very strong supply zone. That price is actually broken above now and should be returning to the other side too, okay, to the weekly FVG, which will be here, right? Or the weekly validation point, as I call it. So in that case, then there should be some selling that takes place, which from the looks of it, measuring it, is quite a few pips. Let me make sure I've got this right. I'll take this from here to current price. So 141 pips. So the ideal thing here is that in this case as well, with this spike that happened, it actually didn't take the weekly high. All right, which they've left the weekly high alone. Interesting. Okay, instead of taking the daily highs instead. That still may be a good enough trigger to push the price short, back down to an area where the price can continue. Okay. And if I was to expect where the price will kind of land off to go for the next major low, I said the last efficient price action from looking to the left is here. And the order block that is responsible for the liquidity here would be this range right here. So what we actually could do here is take the range from here and work out where the optimal trade entry is, or optimal trade entries are, which is anywhere from this range. Now, if the optimal trade entry is there, but there's no order block to the left, I don't really like to just take the trade just based on that fact. I like there to be, excuse me, I like there to be an order block as well. So bearing that in mind, if the price is going to go short, I'd expect it to probably come to 86 instead. All right. Now, we don't know what the news is going to hold because it's a speech and it's not data. And that's what puts the market in a little bit of a risky position. Even though the price is predefined, every price you see was always going to be that price. But, there is a little bit of a factor where the price may do some dodgy things, all right, on top of that. All right, now the next one, USD-CHF, there's not much to talk about. It's still a long. It may drop down a bit further, but it's in the right position. So I'm going to skip over that. I'm going to go to the other pairs I was looking at. So remember, we talked about AUD USD. I think AUD USD it annoyed me because I was in profit with it at least 3 times, but I chose to kind of keep discipline and stick to the trade plan. Okay. But on my funded accounts, there's only so much limit of room I can have for trades. So I couldn't really hold on to lots to the trades I wanted to, like I wanted to, unfortunately. Right. So what I did is I'm going to go through here and I'll just show you what I'm looking at. So if I go over to the daily time frame right here, all right, and I drag this range here, there's an equilibrium point right over here, right? And I'm going to delete all these other lines because they're not even important right now. And I just wanted to see what I'm seeing, why I still believe AUD/USD is along. Okay. So if I go over to the H1 and we take a look at what the price has done, we have this little ranging situation going on. But if we look a little bit more closely, look at this demand zone here. So we have a strong push of demand here, reaction, price reverses, forms a supply zone in this area, pushes down lower. This is the trade I took for the long. Okay. Price then breaks market structure here on the daily time frame. Triggers a reversal to come back to the order block, which is over here. Okay, so right over here. And then after takes off for a long. Now, annoyingly, the price took off for the second long. I had 2 trades here. It came up to this area here, but it didn't enter into the supply zone. Now, the second alternative, and this is probably one of the best alternatives, merging the H1 and the D1. I really like the probability of this trade is that, you know what, because of everything that's going on right now with the price, we may even get a deeper push down further. And I was saying it yesterday that maybe price may even do something else, which is to take the weekly low. So the low of last week is here, and there's a demand zone not too far by, and also like a H4 FVG. So what the price could do is actually just push a few 100 pips lower, I would say 32 pips lower, or 320 points, or let's call it pips, 32 to 34 pips, and take this low. Once it takes that low, that's the low of the week, right? And then that can be a deeper trigger to push the price to go for a long. So from that point, now, for me, this is a beautiful setup, and buying from here is not bad either, okay? The price is already gapping down on the H1. It's just unfortunate that, I got stopped up for the 4th or 5th time at break even, or it's just annoying. Anyway, the second re-entry, if all things don't work out, is if we get a body close here above the H1, on the return here, this would be a beautiful area to load up for a really nice long, providing there's no news at the same time, and just get in for a long right here. The moment the price closes above this equilibrium point, then I know that we're going to be on our way up for like the final wind up of, longs before a major short. And I'm sticking to my main target. Now, with AUD/USD over here, this moment that we had was triggered by the Federal Reserve interest rate news, right? Had a big short, break of market structure, and not too many returns or any significant return to this area here. And along with that, the market left a very clear daily validation point, right? Right here. So my target would be, if the price does this and launches off for a long, I wouldn't want to close until the price does this 7630 level. And then I'll be looking for some major sells after that, because I do think that the price has one more long left in it. Okay. So this is really the idea that I have. Now, because the price has come here twice, I mean, it could go long. If it goes long without me today, I would be annoyed, but I'll just get in on the second area. But of course, I had to get stopped out, just to reduce the loss and the risk and whatnot. So that's really why I like AUD/USD. Now, NZD/USD is similar. Yesterday, it took off without having to take the lows. But just taking a closer inspection here, we do have quite a few lows hanging around here. And again, just like how AUD/USD is behaving, we've had one reaction here in the Asian session, where the price has come for the high of the previous day and then sold off, even broken market structure. But then the high of that day has been combated by another high, which it looks like this was created in the London session. So the London session has created the high of the day, right? And the price is now making its way further down lower, okay? So with this movement here, if it does follow through, I'd expect the price to definitely aim for this low immediately. Okay. Before trying to proceed for any more long activity. All right. Now, NZD-USD, it has filled out. I guess the wick of the candle has come into this area, but it'll be better for the body too. But similar to AUD-USD, we had a major movement here. I would like to see the price get into this area. But more importantly, the major move, which was the D1, if you guys were on the live with me, you would have seen. I'll take this all off here, or tape it off in supply. We had the price do a movement here, where it came for the monthly high in May last year. All right. Then the price dropped down here. This is the swing low. So we did get market structure break eventually, right? But when the price was on a return back into that supply area as expected, the price didn't return in there before pushing for a short. So it probably used some sort of validation point / FVG or something to proceed for that movement that I'm talking about. And here we go, there it is. So what the price did instead was use the FVG here. As you can see, to the pip, the price went into this area. Literally the close of the candle closed on this low. And then we had that very strong sell straight after. All right. So coming back to the daily time frame, I'll just keep that there so you can see exactly what happened. What the price did, because it has to fulfill efficiency, and I'm going to put this here, we came all the way back after another induction, first time into the area, right? And that was supposed to produce a sell. We had a sell, but not the strongest, but it was still a sell. So the next month, the price took the high of the previous month to attempt to do it. But this time when there was selling going on, there was hardly any reaction. So the market came back a third time, which is at this point right here. This is the interest rate news for the Federal Reserve when they really hiked the interest rates. When the interest rate hike kind of bull run, if you want to call it that, started to occur. So once that happened, we had a massive short. The price left a gap and the FVG validation point, went down for a short now. So if I was to take the range from top to bottom, so I'll take it from the highest high to the lowest, from the highest high since that move to the lowest low since that move, then you'll see that in this kind of premium and discount range, the 86 level over here is where the gap is, and is also where this supply zone is here. All right. The equilibrium level is where the price is getting towards. So right now, in terms of selling, we actually are in a premium for selling. So institutional money wouldn't really want to be selling from these areas. More they should be buying, because a premium for selling is going to be a discount for buying, right? Because, you know, think about it logically. It will be cheap to sell, but also cheap to buy. So whoever's a buyer would get a good deal, but whoever's a seller will be cheated out of, you know, a few bucks in this case, or a few millions. All right. So this is ideally what I think the price is going to do. Now, AUD-USD needs to do 320 something pips from the current price. NZD-USD needs to do 260. So in the same kind of range, and they all have the kind of same point. So this is where I'm looking for the long. And for that long to happen, this is why I'm for the long. We just need good triggers. Now, I would say it will take a lot of effort, but if the price so chooses to today, to use the news and maybe come back to this supply flip zone here, right? And then push a little bit further down using the news for, you know, the volatility and liquidity, push the price down here, which is about 91 pips, and take the low of the previous week, just like AUD-USD, and go for a long, then that could actually work as well, all right? The other alternative is the price can find the low to take. Now, I like to look for the price to find lows, because the lows will be where the sell stops are, and that's where they can offload one position or one direction to get into another. So by my estimates, looking at the price, I'm sure we're probably going to come back down into this range, because there are like equal lows here that I've left behind. There's a few kind of lows that are significant enough. I mean, this low alone, I'm sure this is a low that sticks out like a sore thumb. Everyone is looking at this low, so I'm sure there'll be stop losses beneath there or sell stops and stuff. And yeah, from that angle, we could actually get something. Now, we've got about 9 minutes left until the news comes out. Yesterday, I would say was worse though, because yesterday, the market was just, before the news even came out, there was just spikes everywhere, which were all like Judah swings and unfair ones too. All right. But right now, the market is actually in a little bit more calmer. So we might actually get the price to start moving in our direction. Okay. It's just unfortunate that the price has just been very still annoying. So the other pair, I'll show you all of my setups here. I need to find it because I don't know if my eyes are just not working today. Okay, let me press show all. Let me see. Okay, here we go. So somehow we got put all the way down there. So I'm going to drag this. I want to take a look at USD but I want to bring it up here to where it is rightful position, which should be right in the top with all the other major pairs. So just give me a second, drag it all up. All right, here we go. So if I go to USD JPY, now USD JPY was a great setup. All right, now I know the price wants to go long on USD JPY, don't get me wrong. But I was taking a look at this high here. This is really the last, one of the last highs before the liquidity void will be filled out and the price will come to this weekly FVG movement here, area here. Above this high would be liquidity, definitely. And I was aiming to take advantage of that and I took a sell trade based on it. Now the high that I was working with was 142,252. Let's see what this one says. This one says 250, so really not so far apart. All right, for the benefit of this live, I'll use the price of the high of this broker. On my other broker, IC Markets, it says 252. So we'll just give ourselves like a 2-pip allowance anyway. All right, so looking at that, what my idea was with this trade here is simply if I come back again to the weekly, all right, if we look at the supply zone we've got over here to the left, you can clearly see that price is broken above this area, returned and gone for a long. So my angle really was this is, in this kind of situation, there will always be a liquidity void left that will need to be filled out, which is where we could actually get a short-term sell before the price launches off for an amazing long sooner or later, which is when the dollar index will gain its strength, of course. So there's no real inefficiencies here I can see. The only thing is that we do have some weekly lows here, like they're all weekly lows and they're higher lows that the price has formed. I would like to see the price maybe go for these to kind of find at least, not all of them, but at least two or even just one of them, because that would give or allow the price to engineer a very strong run for bullish liquidity at that, at that point. So again, going down in time frame, I mean, without having to look at the highs, I still do believe there is a short to come on USD JPY. We've got this demand zone over here. All right. We've got a demand zone over here. The price has taken the lows here. Excuse me. The price has taken some high, excuse me, not lows. And the only thing I don't like is that we have an impulse move that when the price returned, it didn't come to any FVG or anything like that. I guess there's an inverted one here, but it didn't really come to any on the, to fill in the gap of any liquidity void or FVG on this side. And it didn't come to the demand zone either, but the price was still able to do quite a strong long. It doesn't look like a lot of pips, but it's over 200. At its highest point where it is right now is about 258. So that is a lot of pips to not return to the demand zone. So my first kind of target was for price to reach back down here. And if the price would want to do so, maybe even take these weekly lows and find a new area of demand slightly lower. Somewhere like here, for example, and I can use the H4 to do it. We have a clean area here on the H4 where price broke above, return, came back to the other side. So if we trace the liquidity by their order blocks, then the next, or one of the major areas of demand, even using this H4 area, is here. Let's put this out. Right here. So right over here is a major area of demand. If we look a bit further, you might not be able to see this, so I'll zoom in for you guys. Notice what the price did. So it took off for a long, but look at this wick. The price filled out the FVG, but they didn't come back into demand. So we might actually be able to capture a good trade where the price will get back to this 137,966 level here. And then from that, that will be the launching pad for a long, because it would have taken out all these weekly lows and then gone for a short. Now, providing this news is actually good to us, because I was in for a sell right at the top. The price kind of just leveled me out and break even me, and then after stop me out by a couple of pips, which is so annoying, but it is what it is. You know, I was in the short over here, price pushed down. I actually thought the market was actually going to continue, but nope, price decided to spike back up again. And at the moment on the H1, it's taken the daily high, basically. Right now, the price is taking the daily high. Now, this may actually be the trigger to go for a short. We've got 3 minutes left, okay? The market may decide to use this as the trigger point to go for a short. You know, I think I'm pretty much done for the day. All right, we do have a little bit of a structure break above here. Price took out these equal lows over here, pulled back up, and now the price has made lower lows. That this might actually be an entry for a short, possibly. If I do the M1 supply liquidity, which is up here, I guess no candle has gone into the M1 area. On the M5, okay, everything's in supply, so not so bad at all. But again, this may actually end up being a short. Now, because there's liquidity gaps here, I might actually give it a shot and see what actually happens. So USD JPY could be another sell, literally. But, you know, because of all the other analysis, there's a lot of conflicts between different pairs. Okay, but this is really my view, guys. Like, if there's anything you guys want to do, I'm probably going to do it before and after, because the news is coming out in 2 minutes. So I want to give you guys space to have a look at what the price is doing for yourselves. And then after, we can actually come back and have a look at what's going on. All right, so those are the setups that I have. Let's see what the market offers us, and I'll catch you guys later on, okay? So everybody take care. I'll probably come back for an aftermath of what happens at 3 o'clock. All right, yeah. Take care, people, and enjoy your day. If you have questions, leave them in the comments if I'm not live, and just, yeah, let me know what you guys